Hello, everybody. This is Monday, November the 7th. This is John Blank with Zacks Investment Research. I'm the Chief Equity Strategist and Economist. The disclosures, let's get through quickly. These views today are mine, and they're not necessarily the views of Zacks Investment Research. Keep that in mind. So today we're going to go through round 5 of our roundup on semiconductors and electric autos and batteries and autonomous vehicle ETFs. This is really some of the most exciting and groundbreaking technology that we can explore in this series of 5 pieces. And then we're going to get into the very early stages of the issuance of ETFs that are surrounding this technology. Personally, feel that I'll make the case today that these ETFs are kind of jumping the gun in front of the technology itself. So in order to do that, I'm going to go through part 1, an electric auto roundup. I'll give you the state of play that I have built in my own mind. I would suggest all of you to Google these names and pull up the YouTube videos on these different automotive brands and their marquee electric offerings. It is fascinating. It really is the first place to go to build up your understanding of where the state of play is, because in the next 5 or so years, 10 years, this is going to be transformative. And like I said, the technology is really the exciting thing. Part 2, we will get into the electric vehicle, battery, and autonomous vehicle ETFs. I will point out their composition, and I will point out why I think they're kind of in front of the revolution, not really enabling you to play in it. I will make that case. Obviously, you can choose to hear that or not. All right, part 1, electric auto roundup. This is the technology and the story of it. It is fascinating. First of all, keep in mind, when we're looking at the macro markets for battery electric vehicles and plug-in hybrids, by the way, these all have different, there's fuel electric vehicles, all kinds of different acronyms. Please be in mind with plug-in hybrids are not also consistent with hybrids. These are plug-in hybrids, so they have both an electric and a gas internal combustion engine. And these give you, 20, 30 miles of pure electric driving, so you can do errands and take your short trips without actually going to the internal combustion engine. This is kind of the new thing for plug-in hybrids versus hybrids of the old style. Battery electric vehicles, most of them run on these lithium-ion batteries, but there are drives to go to hydrogen fuel cell technologies. Again, that's probably in the future, not in the current moment, but that is the holy grail for the emission reduction, expansion of possibilities. So let's go through a little bit of this. First of all, here's the ramp up. You can see that China annual sales of plug-in electric vehicles is now 3.3 million. In Europe, it's 2.2 million. And yes, actually, the United States is only 600,000 last year. So keep this in mind. If you want to think about where this is building up from a pure volume perspective, it is China at 3.3 million, Europe at 2.2 million, and the United States at 600,000. So in the United States, of that 600,000 in 2021, you can see plug-in hybrids are about 160,000, and 450,000 are the all-electric vehicles. That is your Tesla, effectively. So over here, you can see annual sales of hybrids, which is the blue, hybrid, HEV, plug-in electric vehicles. Remember, hybrids were not plug-in hybrids, but hybrids, and then plug-in electric vehicles. So you can see the plug-in electric vehicle transformation is what's going on now. And that actually is driving some people back into plug-in hybrids at the same time. So plug-ins, whether they're fully electric or hybrid, is the real issue. Here you have BEVs, battery electric vehicles, and then you have plug-in hybrids, PHEVs. So here you can see exactly what I'm talking about. As they build up towards that 1.8 million in the US, it's both of these things that are now getting to play. And this is, you can see this has been building, so basically over the last decade. Now over here, we've got ownership rates per thousand. And again, now that I've talked about China, Europe, and the United States, you can see that Sweden, Norway, and Iceland are far in advance of California in their adoption of this. Then we have California at 27, which is actually 5 times that of the United States itself. Germany and the Netherlands are the strong spots outside of Scandinavia. And then you have China, while at volume rates much higher, still at adoption rates less than the United States. But keep this in mind as a backdrop of where we are as a sales market for battery electric vehicles and plug-in hybrids. All right, these are the patent stories. This is a fascinating story of the push to grant and file patents on all this stuff. I just want to point out the timeline here. You start down here with Nissan in 05 to 15. You can see Nissan with the Leaf, which is the small electric vehicle that's out there, that's cheapest and is worth looking into. Look at the Nissan Leaf. They filed patents way back in 05, and that was the hybrid thing. Then they went down, and then they filed a bunch more, and they got granted all these patents in 2015-ish or so. So Nissan has been kind of a leader. They've kind of been forgotten at this point. That is still true, and that's why you should take a look at the Leaf. Then we'll go to General Motors. General Motors got in there in 2010, 12 years ago. They have also been very revolutionary. The Hummer is worth looking at. The thing that's at the crab walk, the extract mode, multiple, dozen cameras to look around the car. It's 110,000, but the Hummer has a lot of technology that's probably been granted patents here. Then we've got Hyundai. Hyundai, again, I would say it ramped up around 2012. This is another automotive group in South Korea that's got some excellent all-electric SUV right now. Probably Optic 5 is probably the best looking and most innovative car I looked at it preparing for this. So take a look at that. Look through the 7-minute video on the Hyundai website, Octa 5. Very worth your time. Over here, Tesla. Obviously, Tesla gets a lot of readings in the United States because of it's the dominant story and its eponymous CAO. I just want to point out that most of the battery and patent technology, 2015-ish, actually a little later, they focused on batteries. And then Volkswagen is the last of the stories. That's 2018-ish. So again, you can see we're looking at patents been issued over the last 15 or so years, 15, 20 years. That's not technologies that have all been put in place. Those are what's going on now. All right, so this is a great breakdown. I can't suggest enough to go through here. Google these models and these brands and look for the YouTube videos of these various things. It is fascinating. Obviously, Tesla is really more of a battery company than most people understand. Superchargers, wall connectors, and the 4680 battery, which is going to have 5 times the driving range of the 2170 battery, and I should say 16% driving range and cost savings, and it's 5 times stronger. So all this stuff here, look through the supercharger, wall connector, power wall, battery that's coming out. It's all based on this lithium ion structure for Tesla. That is, helped by Panasonic, and again, very important. So Volkswagen. This is the ID4 and the e-Golf. E-Golf is a small one. ID4 is worth Googling. But the NatureStrom Connect is worth talking about. In your plug-in in Germany, what you can do is you plug in, but you actually have the plug-in have an app and choose to charge that car when there's renewable emissions available. So basically, when they know wind and solar energy is available, then your NatureStrom Connect will charge your car more than other times. So it's trying to get to this idea that just charging your car electrically, unless it's charged from renewable sources, is not really solving this emissions problem per se. So NatureStrom Connect is their big idea. It's an app. It's pretty much in Germany, in that area. Very worth looking into. The mobile charging robot, fascinating to have a robot come to you with charging capabilities. Haven't seen that out there in the marketplace, but it could come. GMC Hummer, this is 110,000. Obviously, they've used a lot of these Ultium batteries in the very expensive Hummer because you can provide this idea of off-road performance and super fast torque with the GMC Hummer. It comes in 110,000. It's not cheap. But the Ultium and these systems, the crab walk is fascinating. You can basically go diagonally with the GMC Hummer. Chrysler Pacifica, the Fiat 500e. The Fiat 500e is worth Googling. It's another state of play, and it's worth looking into. Then I get to this one. The Ioniq 5, like I said, is worth Googling and looking at. Number one thing I looked at today that I thought was the most groundbreaking is the Ioniq 5. how the floor plate is lower. Everything is designed electric. They've just gotten rid of any reference to the past internal combustion engine. If you want to see the state of play, in my mind, that's the top end. It's Ionic 5. Actually, not actually that more expensive. 40, 50,000 here. Great thing to look into. The Mercedes green charging technology. Basic thing that I want to point out here is wireless charging, where you park your car over a wireless pad and it charges it without cords. Cords are a big problem with all these things, and this is something that gets rid of. Over here, the hydrogen fuel cell technology, BMW, betting hard on this. Not in the market yet, only in testing, but they do have prototypes out there with hydrogen fuel cell technology. This is actually, getting out of the lithium struggle, which we'll get into. The battery play here is to buy lithium makers in the chemical process that are required here. Hydrogen fuel cells do not require that. The Leaf is a really worthwhile thing for a small, if you're looking for an affordable electric vehicle, the Nissan Leaf's probably the thing you want to look at most. SAIC, Shanghai Automotive, this is China's largest automaker. They bought MG and the Rover brands. They've also done deals with Volkswagen and GM. This is like basically, take technology through joint ventures around the world, take brands from around the world and create a Chinese platform. So this is their idea. They do have a car out there. They started, production, and they're trying in a command economy sense. They're also expanding in odd places like Iran and Tunisia because of the communist state of affairs of the origin of the company. Fascinating story here. Take a look at it. All right. So another thing I want to quickly go through, we went through this past. These are all the auto semi producers and the tickers. Just keep in mind that all these companies have to require automotive batteries, electric, motors, and then of course all these auto semi things to get all the smart technology and autonomous performance going. Keep this in mind. You can stop at any time and look through these names and write them down. All right, so now we're getting into the ETFs of the electric vehicles and the autonomous vehicle ETFs. Here's my story here. First off, these are the issuers. Drive, iDrive, Hail, Cars, FORB, CarZ, Lit, and BAT. These are the battery ETFs. These are the automotive and electric vehicle ETFs. Now, Murray Assets Global Investments, you can see them with the largest Lit, that's 4 billion. This is the largest one we'll talk about in terms of assets under management. And this is the Drive, the ticker DRIV, is their largest of the autonomous electric vehicles assets under management. So basically, Murray got in here first with lithium batteries in 2010 and later with autonomous and electric vehicles in 2018. Their expense ratios, 0.75 here and 0.68, are actually quite high. So then the later ones have come in, here you said iShares, which is Blackstone's iDrive, and that is only at 400 million, but they've got a 0.47 expense ratio. So they're taking, a lot of times you'll see those ETFs, people will come in later with cheaper ETFs to try to drive asset under management their direction. Fidelity has entered this quite recently, in 2021. Their play is FDRV, starts with an F, keep that in mind. I starts with an I. And they only have 40 million in this, but they're actually the cheapest because they're trying to build out that asset under management, keeping this expense ratio down. So expense ratio competition in play here. Inception dates, Murray first, and then we moved all the way. However, First Trust in the United States did actually try an autonomous and future vehicle. CARZ, there's almost no asset under management here. It's down there at 40 million after 10 or 12, 11 years, and it's got a very high expense ratio. Not sure this is a great play here, but let's keep it in mind. Cars is the oldest. Let's take a look at what they did that's different. Okay, so over here you can see Cars is the oldest and is 60% US. Now down here is the batteries, Lit and BAT. And you can see that both cases, China, Korea, and Japan, Hong Kong, all these places have much more play in these areas. So the battery story is non-US based. You can see that the US gets some play here at 20%, 25%, but it's basically not the US. Keep this in mind. You're going to buy a non-US stock here. So all kinds of implications for the stock, the currency issues, the amount of interest people have in non-US companies. If you're looking for a pure US story here, you're looking into Hail. However, hail is this thing where you basically go out and it's smart mobility. Again, very small assets under management and a lot of really speculative names that are going to blow up on you. So tough to like this one as a play here. I want to point out here, Kraneshares, KARS, is actually owned by this startup by China International Capital Corp. So this is a Chinese listed ETF based on the Bloomberg Electric Vehicle Index. It does have a decent amount of assets under management. So if we look at where SIC plays, that's the cars here. And you can see, to no surprise, China and Hong Kong are 40%, 35 to 40% of this ETF. So to no surprise, they've got some more play here. The iDrive, the iShares play is half US and much more dominant with some players around the world, which is kind of interesting. Keep in mind, most of the times, you're going to see the top 10 or so of these names and regions as we go forward. So let's take a look at these names. So here we go, cars. This gets to my point here. You can look at these top names in cars. They're basically 3 to 5% portfolio weights, but these are names you already know about: Apple, Microsoft, Samsung, Tesla, Qualcomm, Taiwan Semi, Nvidia, Intel. So basically, these are just giant tech companies. Not really interesting. Now get over here with hail. Hail is interesting from the name perspective. Uber, Innoviz, Visteon, Rivian, Cummins, Avis. Great to look at the names here. Very diversified. But also a lot of junk in here. Like you can see that we got Lordstown in here. Lordstown is blown up, and that's probably not going to work, but it's in there. And then you got part suppliers like Textron. This is interesting. Sometimes you'll see the actual part suppliers in these lists. Keep that in mind. Aptiv is another one that's a part supplier. Here's an interesting one. I like this one from a name perspective because you've got some of these semi names. Skyworks is in here, Wolfspeed's in here, Garmin's in here, ST Micro's in here. Over here, you've got, this is one of these names with all kinds of different stuff. When you ever see Albemarle, you can see Albemarle is the top lithium brand for lithium ion plays. Plenty of others to look through here in the lithium story. Just realize when you get Albemarle at 14% of lit, you'll get it over here 2% with battery, because there's a lot of other plays for battery versus just lithium. Keep this in mind. Lithium is lithium. That's a type of chemical for battery use. This is batteries per se, much wider. So you can see we've got, all kinds of, this is the Fidelity, this is the iShares, this is the China one. We've got all these different kinds of ways to look at this. But by the way, as I've said, most of the time when you look at these names, you can just buy the names or look into the names. Down here, I think this is probably the best lesson. You can learn a lot about how lithium battery technology is evolving. All right, so just from a total return perspective, that's over here. And over here is a price excesses 3-month change. So this is your alpha story. How much alpha do these generate? And as you can see, they generate a lot in certain periods, and they generate negative alpha in other periods. So these are very volatile, and they actually do not do very well in down markets like we're seeing. Now, here is lithium, ticker LIT. You can see LIT has held up better than these other ones. Hail is really coming down. Cars is really coming down. Basically, you can also see for all this diversification, you've got no real benefit from any of these ETFs because they're all owning these giant tech companies. Lit is the different one because it's focused on lithium. VCAR is, we've thrown in here. This has got puts and calls. The strategy is to try to limit some of the volatility. Has it worked? His track record is very short, and obviously it took a big hit here with the down market. But in fact, it probably did limit the downside to some degree, even though there was downside because of this put call option strategy. But keep in mind, over here is the total return story. Drive, iDrive, and cars are all basically the same. Down here, hail is came down harder because of the speculative names in here. Lit, because of the strong performance of the lithium market and the dominant role of lithium in batteries for electric vehicles now, it kind of stayed up. All right, so here's the price earnings and price to book. I just want to point out here that you've got a story of, particularly in Drive, there was a huge bubble formed here, and now we're back to very standard PEs for this. The one that sticks out here, obviously, you can see is Lit. Again, price to book value, that one held up. Like I said, the lithium story is separate from the rest. The rest of them are kind of toggling around together, which just tells you you really don't have much difference in these ETFs in terms of their performance. Lit is the system to form. Okay, here's Hale. I just want to point out all kinds of different stories here. For example, Grab Holdings in here, it's $2 a share. It's only 1.5% of the thing, but this is just basically a super app for food deliveries and stuff. Plug Power is another top holding. We'll get into that. That's the hydrogen fuel cell story. Again, speculative name, still not profitable. Innoviz, this is LiDAR. Again, speculative name, speculative company. However, Rivian is in here, very speculative. So Hale has got all these speculative names in here. Keep this in mind. Then you've got On Semi, which is also in here. But then again, why not just buy On particularly and stay away from all these speculative names? So Uber's in here. I don't think you can find a more speculative ETF than this one. There's nothing but non-profitable stocks in here. I would not choose Hale. All right, cars. This is, like I said, the one that's China-based, based on the Bloomberg Electric Vehicle Index. You can read this at your leisure. What does it buy you? Some things that are actually interesting. Aptiv, which was the old Delphi Automotive brand. That's the Nidec, which is an electric motor vehicle producer in Japan. Leave Auto, which is in Beijing. And then, of course, we've got the story of Albemarle. You can always see this name in here at a high level in all these electric vehicles with the lithium story. But again, you've got names here to play. NIO's in here. BYD is in here. Samsung is in here. Keep that in mind when I talked about Hyundai. You probably got an Aptiv play here through Samsung. I don't know that for a fact, but I guarantee all these big conglomerates in South Korea are kind of working together. All right, Plug Power. We've got to talk about this. This is this hydrogen fuel cell name. These are their brands: Gen Drive, Gen Fuel, Gen Care, Relion, and Gen Key. And here's the stock price. As you can see, the earnings estimates have collapsed this year into the negatives. This stock was speculative in the period of free money printing. It's come now nothing down. It's still less than $20. It used to be 60 and over. Don't like this name. Like the concept. Like I said, it's worth looking into Plug Power as a concept. I think the share price is trending down on negative earnings. That's the problem here. A lot of these areas, the reality of profitability is not there for these names, and the technology is, years to come. It's fascinating. Like I said, from a car perspective, looking like, for example, the Optiv 5, really found that fascinating. Look into that as the number one thing I could share for you to really show you where this can go. All right. Drive. This is a classic example of why this is really not all that revolutionary. Here's DRIV. Here's the top names. I mean, yeah, they've got lower weights, but Tesla, NVIDIA, Apple, Microsoft, Qualcomm, Alphabet, Toyota, Honeywell, Ford. This is not innovative in terms of names. Obviously, all these big companies are involved. There's an accuracy in using them. But look at the negative returns on these big cap names. All you're doing is basically a big cap idea. And that's probably the wrong place to be from an investor perspective right now. iDrive, again, a lot of interesting big cap names that are basically getting turned over and shot these days. Didn't like that ETF, didn't find it that interesting. So that is it for me today. I hope you enjoyed my talk. You can find us on the web or Twitter or LinkedIn. This is, our 5-part series. You want to get a hold of the other slides in the other areas of this and enjoy yourself. Thanks for listening to me today. And that's it.